Welcome back to Explain the Charts, where we break down the news and chart data to help you make better trading decisions. Today is October 14th, 2024, and we're taking a deep dive into QQQ, the Nasdaq 100 tracker, to see if it's time to be bullish or bearish. The latest news surrounding the Nasdaq is mixed, with a recent surge in the Dow and S&P 500 due to strong bank earnings reports. However, there are concerns about the upcoming tech earnings season, which could lead to some volatility. Inflation is also a hot topic, with a recent report showing persistent consumer and wholesale inflation, raising questions about the Federal Reserve's next move on interest rates. These events suggest a potential soft landing for the economy, but uncertainties remain about the future direction of the market. Looking at the daily chart, QQQ is currently trading at a price of 492.59, which is above its 50-day moving average. This suggests a short-term bullish bias, but the price action over the past few weeks has been choppy, indicating potential indecision in the market. On the daily chart, the recent price action has been consolidating within a tight range, suggesting a potential breakout to the upside or downside. The high of this consolidation range, which is around 494.50, could act as resistance, while the low, which is around 488.50, could act as support. If we look at the 1-hour chart, we can see that the price has been trending upward for the past several hours. The recent price action has been breaking above resistance levels, suggesting that the bulls are in control in the short term. The 1-hour chart also shows that the price is currently trading above the 20-period moving average. This suggests that the upward momentum is strong and the price is likely to continue its upward trend. Zooming in on the 15-minute chart, we can see that the price action has been very volatile over the past few hours. This suggests that the market is still trying to find its direction and traders are cautious about making big bets. The 15-minute chart also shows that the price is currently trading above the 50-period moving average. This suggests that the bulls are in control in the very short term, but the volatility could lead to a quick reversal. Looking back at the daily chart, we can see that the price has been consolidating within a range between 488.50 and 494.50 for several weeks. This consolidation range is also known as a flag pattern, which is often followed by a breakout to the upside or downside. The fact that the price has been consolidating within this range suggests that the market is indecisive about which direction to move in. The volume has been relatively low during this consolidation period, indicating that traders are waiting for a clear signal before making their move. If the price breaks above the resistance level at 494.50, it suggests that the bulls are gaining momentum and the price is likely to continue its upward trend. However, if the price breaks below the support level at 488.50, it suggests that the bears are gaining control and the price is likely to continue its downward trend. Looking at the current news, the strong bank earnings reports could be a positive catalyst for the Nasdaq, but the concerns about the upcoming tech earnings season could lead to some volatility. The Federal Reserve's next move on interest rates will also be a key factor to watch, as it could impact the stock market's overall direction. If the Federal Reserve maintains a dovish stance and continues to cut interest rates, it could create a more favorable environment for growth stocks, which could lead to a bullish breakout in QQQ. However, if the Federal Reserve becomes more hawkish and raises interest rates, it could lead to a bearish breakout in QQQ. It is important to note that these are just potential scenarios and the actual market movement could be different. In conclusion, QQQ is currently trading in a consolidation range, with potential for a breakout to the upside or downside. The key price levels to watch are the resistance level at 494.50 and the support level at 488.50. A breakout above the resistance level would suggest a bullish bias, while a breakdown below the support level would suggest a bearish bias. The upcoming tech earnings season and the Federal Reserve's next move on interest rates will be important catalysts to watch, as they could impact the market's direction. It is important to stay informed about the latest news and events, and to use technical analysis tools to identify potential trends and reversals. Remember, this analysis is just a starting point and not financial advice.